Apologize for the delay. How is
No
the?
worries. How's it going?
It's all right. The stream's decided it wants to bug out in the final closing seconds of these awesome interviews, but aside from that, I'm great.
That's a shame. Sorry to hear that, but technical challenges always happen somewhere.
Always happens somewhere. Can you hear me or can you see me okay?
Yeah, it seems okay to me.
Wonderful. All right, let's crack on.
Yeah, that's a kind of the end piece maybe to a very long story of writing about how the VC industry has changed recently. Um, like it hinges on this idea. I think a lot of VCs will say today that venture capital feels more competitive, but it isn't. And that's because and you can look at this from a number of angles, but like if you have experience in a truly competitive setting, people will do absolutely anything to be the best that they can. Clearly not the case in VC. Like they're not reading the research, they're not reading the literature, they're not doing everything they can to maximize performance. It's also not true in the sense that there's this concept of finite games and infinite games. And at the highest levels of competition, you care about the infinite game, which is also not just whether you win, but how big the win is. And that I think is also something that has been neglected a bit in VC. Mhm. Yeah. Well, I'd say it's more like in the finite game, you care do you win the basketball game you play next week? Or do you win the championship that you're currently involved in? Like you care about the relatively short to mid-term stakes of the competition. And it's finite in that it's kind of zero sum. Like if you win, then inherently somebody else doesn't win or nobody else wins. Whereas the infinite game is more like how many people are coming to NBA games to begin with, how many kids are playing basketball, how many high schools are sponsoring basketball programs, what's the revenue of the NBA, like how big is the entire organization? Because then that is how big a crowd are you playing in front of? How much are you getting paid? How what kind of scale of the tournament's operating on? It's the size of the whole thing. And winning in that context is obviously way more powerful. And I think if you spoke to someone like Michael Jordan, he would definitely say he cared about the infinite game. He cared that kids were into basketball. He cared that the NBA was healthy. Well, he definitely cared about selling sneakers as well. That's another part to his story. Yeah. Hmm. 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 Thrive is a good example, actually, like of maybe of one end of the spectrum. So they are well known for having a small, super concentrated, relatively late stage portfolio. And essentially what they want to do is pick is like they get access to the winner of a category because their brand is so strong, their performance is so strong. And then once they're in that company, they keep on investing money, they invest through their network, through their brand, and essentially they want to, like, as much as any VC can, king make that company. So they are like producing a winner at the cost of other opportunities, perhaps, like directly at the cost of other, certainly competitors in the category. The other end of the spectrum, like to go as far the other way as you can go, I would say is like 1517 Fund, one of my favorite VC firms. And like the thing that they do that I found incredible is that they literally find like talented like high school kids and will Venmo them $2,000 to get going on a science experiment that may one day become a company. So they are literally like helping seed whole new ideas, whole new companies that may not exist otherwise. And that is super positive sum. Like that's opportunities that wouldn't exist if they weren't around potentially. Well, as to the 6,000, VC itself is a pretty small industry actually. Well, thank you very much. I'm not as sure about that myself, but for sure, it's great to hear. The other thing is like, n even within that small industry of VC, a lot of the stuff I say, I would say is like not the like consensus view. Often it's like against the what I would say like the incentives of the industry. So like it's not always super popular. So there's that as well. Yeah, yeah, indeed. It's kind of the helpful part of being an outsider, as you and I have talked about before. Um, mhm. Yeah, I think the main thing is, and this is something I'm like, it may just be me, so like huge caveat about that, but it's something that worries me a little bit about like LLMs. This is also kind of a cliche, but like writing is how I think. I will pick a topic that I want to write about, and I can tell you for a fact, I do not know how the article is going to end when I begin. Like quite often the like the hypothesis I start with is not what I end up reaching as a conclusion. So the writing really helps me think it's a part of that process. Maybe that's not the same for everybody, but like to me it's super important. And as you're going through the process of like trying to reevaluate how venture capital works, the incentives, the structures, the outcomes, like it requires like pretty deep thinking about like all of these things. And writing to me is like the only way to explore that. The downside is whenever I've had someone like try and commission me to write an article, I can't do it because they'll give me a topic to write about, and I'm like, I don't know if this is what I'm going to end with, man. No, no, it's why like my blog is my blog. It's not even a Substack. Like I'm not trying to build a subscriber base. Like the content is just there. Take it or leave it. Yeah, that's an interesting question. And I think it connects to like maybe a few different contrarian takes that I have. So one recent example And this is a conversation I've had with a few GPs and a few LPs in Europe. There's a quite generally accepted idea that like the solution for VC in Europe is not that they need more capital. Like there's enough money, like investors just need to be a little bit less risk averse, they need to move a little faster, blah blah blah. What that argument misses is that the appetite for risk is directly connected with the amount of capital. If you want investors to move faster, give them more money. If you want them to take more risk, give them more money. And where this creates the biggest problems for Europe, and this is like almost like existential, is at the first check, like the earliest stages of a company where there's the most risk. Because if you're not willing to fund the crazy stuff at that point, it never goes anywhere. Like it can't become a seed company or a Series A company or a Series B company. Can never get to exit if there isn't that first investor who believes in the idea. So like that particular chunk of the market is where Europe needs a lot more money. And just to give a little bit of context, like the US pre-seed funding in the US, 13 times more capital is allocated per year than in the EU. 23 times more angel capital in the US. So the gap on like inception stage funding, as I call it, like is huge. Everybody talks about like the growth capital gap, but it is downstream of this first check issue. Yeah. Yeah, basically, European investors need to, and like the hypothesis is if they were better capitalized, they would invest faster in the first check and they would have more risk tolerance. There would be more like wacky deep tech stuff happening in Europe, which there really isn't today. And then the whole downstream capital environment from that would over time adapt and grow. Hmm. That's getting there. That's pretty cool. I'll give them that. But like for for contrast, like think about like another one of my favorite firms in the US is Boost VC. They are like first check, deep tech, wacky stuff. They've invested in everything from like drug discovery to jetpacks. And they do a deal a week. A deal a week. Like I don't know if Europe even has like one great deep tech company appearing a week. Like maybe it does. Maybe I'm a little bit too cynical there, but like yeah, in that kind of range, like pretty small, but like that's what's missing in Europe is like the first check to get the thing going. That's what we need. I do like personally, but like I can't compensate for this. Hmm. Well, I would say like one huge benefit in the UK specifically, also in Europe, but a little bit less, is for someone who wants to get started with angel investing. The UK has really well developed equity crowdfunding platforms. Like Crowdcube, for example, Seeders, like 2017, I think Revolut did a round on Seeders. I think they did one in 2015 even on Crowdcube. Like if you were an angel investor in one of those rounds, like you could be sitting on 1 million right now. Like it's crazy. So like the path to get into this kind of thing in the UK is way easier. there is, what kind of non-consensus, wacky deep tech stuff there is. You actually find a reasonable amount of it on these crowdfunding platforms because of the risk aversion of like the institutional investors. So quite often these companies like may have to go to crowdfunding to try and raise that initial capital to get going. So it's actually quite a good opportunity, which isn't really there in the US, ironically. Hmm. Personally, like and like go back to 2016, it was fintech because that was the world I was in. I was like writing about London fintech initially, then I was in a fintech accelerator in Berlin for a while, so I really got into that world. And then like over time, it just became like things, sectors I thought would be important to the future. So like kind of obvious stuff, um, like water, energy, like logistics to an extent, compute. But like I say, it was obvious, but like this is going back 5, 6 years. So like at the time, that those were maybe a little bit ahead of the curve today. But essentially, like I think if you invest in these timeless issues like energy and water, like you almost can never go wrong in terms of industry selection. In general, like being a generalist is the way to go. Like keep your options open for any great company that comes by. I think is always good advice. I would say like this is kind of maybe kind of a lame answer, but like X is kind of the fire hose. Yeah, yeah, exactly. It's kind of the ground truth if you follow the right people. So I have this crazily curated list. I follow 300 people, period. Never more. Exactly. And like I will swap people out every now and then. If I find someone really interesting, I'll have to go and find like who's the least interesting person I follow and they get cold, which is kind of sad. But like those 300 people, like I'd say there's quite a lot of alpha in following those people. Yeah, exactly. Like d don't even follow me. One person that stands out. Like for data on the industry for like trying to track the big trends, Peter Walker of Carter, like the stuff he shares is really hard to beat. Beyond that, I think you can't really pay too much attention to any one person because you have to build like your own conviction and your own mental model. So like it's a blend of everything, but like fed through a filter of like, do I think this is legit? Is it valid? Those either like either become articles very quickly. Like almost all my writing is literally I saw something on X that either inspired me or pissed me off. Yeah, and like big wall of text comes out of that immediately after. Or it like feeds into an article or like whatever. Like it gets built into my mental model through the writing somewhere. I don't know, man. I've There's kind of two kinds of article, I guess. Like there is the very quick reactive stuff, like the one about VC being not competitive but adversarial was like a relatively quick one. But actually, if you look back through like the past 5 or 6 articles I've written, there's threads of that in all of them. So like almost all my writing is iterative. It builds on previous themes. It builds on, everything I've researched for previous articles will shape the next. So it kind of compounds over time. And then every now and then I will sit down and try and write like, okay, like of everything I've read and written about in the last 6 months, like what's the key thing and I'll try and do a very well-researched longer form article. So like the last one of those was about like systematic risk management in VC. So that was going through papers on portfolio management, on overconfidence, on concentration, like a ton of stuff, all like com kind of piled together into this one article. Yeah. Yep. I'm not sure I called them out, but yeah, pretty much. Hmm. I think you have to look at like how insane the structure of venture capital becomes at the level of a firm like A16Z. So like on one hand, like just for contrast, you have like the 1517. They're investing in like high school kids who are building cool science stuff. And that's like to me, that's what venture capital is. Like it's funding experiments, trying to like develop progress and then like generate outsized returns based on the companies that come out of that. On the other hand, at like the huge end of the spectrum, like A16Z is absorbing incredible amounts of LP capital. They're also deploying money into other venture firms for deal flow. They're running scout programs so they have like feelers out across the entire ecosystem. They're investing in technology categories and simultaneously promoting those categories to like herd in other capital. So they're like in a way that a normal investor never would, because if they discovered a category that like had alpha, they would want to keep it to themselves. But A16Z is like, no, no, everybody pile in because we want this thing to go as fast as possible. And you could look at yeah, but like essentially they speed up the like the growth in paper value, I'd say is what's at the core of that. They want the markups as fast as possible. And then like yeah. Hmm. Yeah. Yeah, exactly. So they kind of keep that wheel turning. Hmm. I think and you can go back through the history of A16Z. It's quite interesting. Like the first fund they raised was a very traditional VC fund, and they talked about like the portfolio strategy and the risk in a very like traditional VC way. Like even talking about like the danger of overfunding companies or companies raising too much, which is like antithetical to Andreessen Horowitz today. Where it changed was basically 2009 post financial crisis. Suddenly we saw the same kind of pullback that we saw in 2023,
Hmm.
where like the big brands were able to come back sooner and raise more money because they had the trust of LPs. And like I think Andreessen Horowitz saw that and were like, we want some of that too, so we're going to become a giant.
I can't wait to do.
For sure. Do you want like past investors who I think should be on there or like okay, all right, I'll give you a quick four. So I said 15, 17 a bunch. So Daniel Stragman from 15, 17. I talked about Boost. So Adam Draper of Boost, he's also like a fifth generation VC. So like he deserves, yeah, exactly. Well, and his great grandfather as well. So like, yeah, seriously, he's in a, I don't know. I mean, maybe they're out there. He's busy. He's busy investing. Um, Cyan Bannister, like legendary investor, legendary angel, incredible, early to SpaceX. Like, what more do you want? And like an up and comer, maybe like Grant Gregory of Cantos. Like he's a proper like deal maker, deep tech VC. Like I'm a big fan of his. I expect great things.